Good afternoon, everybody. Welcome back to my channel. Yes, it is me, Cordero Hudson, the Millennial Investor 1914. Holla at your boy. It is Friday again. Today has been a rough week. This is my second week back from my PTO, and let's just say it's been a rough week. Work has been working its nerve, but I've been getting back to my routine. I've been in the gym, been pumping iron. But today's video, I wanted to present something to you guys. To the title of today's video is, and as with the thumbnail, time in the market beats time in the market. And I know for a lot of experienced investors, you already know what this is about: dollar cost averaging and basically sticking in the market, rather if the market goes up, go down. But also, I wanted to present to you there's certain stocks, like for example, with Nvidia. Before Nvidia has done a split this week, Nvidia was at like 900, close to like 1,000. A lot of stocks like Costco, and what I'm going to show you is it costs a lot. Now you could dollar cost average into that stock, and if you got the whole $500, you can buy it. You could dollar cost average. But a lot of times what happens is that as new or even sometimes experienced investors, we like to just try to time the market, time when the market goes down, so that if we got the money, you can buy certain stocks because maybe the stock may be too expensive. But also sometimes when the stock market goes down and it's a bear market and you're scared you're gonna lose money, a lot of times a lot of people just they cash out, they sell their stocks. So today's video is really about time, not time in the market, time in the market. And I'm going to use two examples. I'm going to use Nvidia and I'm going to use uh, Broadcom. Broadcom is on a tear, and that's why you see I have these two tabs real quick. So just to prove my example. So for my first example, I'm going to use Nvidia. All right, here we go. Nvidia. I made a Facebook post a couple days ago when Nvidia, I was trying to tell people like, hey, get into Nvidia. Today is the best day to buy Nvidia. The Nvidia did the stock split last week, and then on Monday the shares had finally split. And you see right here, because I had four, 10-1 split. I received 44 shares, and I want to show you right here. Okay, it's split. It did its cost basis, but originally, I bought in Nvidia when it was at $450. So on a five do a 5-year basis, they already have updated the charts. This is frustrating because beforehand, uh, right, it was like right here. Because since my cost basis is 45, I bought it at right here, and it's been up. When I bought Nvidia at $450, Jim Cramer, a lot of people was like, "Hey, uh, the stock is too expensive. The stock is too expensive." You ask a lot of people, a lot of people thought they know it all. Uh, Here's another example, perfect example. In my growth pie, this is my growth pie. You see certain stocks. You see stocks like EOG, which is $117, AJG, which is $257. You have ODFL, which is Old Dominion, $172. It's way easier to buy these stocks because these stocks are under $200. So the average everyday retail investor like me, like you, we're not making $1 million. We're not making $500,000. And so a lot of times when you see a stock like Centos, that's $693 per share. When you see stocks like Costco, which is $852 per share, if you are a new investor, you're gonna look and you're gonna be like, whoa. Like for me, I dollar cost average. So here's an example. Here is my how I break down. So here's how I know that here, for example, I'm going to, I'm going to I'm going to invest $1,000 into the market. I already did it my first check. Next week, I'm going to dump another $500, which equals 1,000, and I'm going to buy this. And for me, this is how I know that. Again, you just saw that Costco was at $850. So when you dollar cost average, if you don't have the full $800, you could buy pieces and portions of that said stock. So in June, $75. In July, $50 at Costco. August, another $50 in Costco. September, another $50 in Costco. And so how you know right there, for stocks that the shares that's ridiculous. See right here, $852 and $825. You may not have the full 1,825, so you dollar cost average. Time in the market beats time in the market. A lot of investors like to time the market and say, "Listen, I may not have the full $693, but if it's a red day like today, here's an example. I'm going to duplicate this. I'm going to duplicate this right here. I'm going to go to the screen. Right now, the Dow Jones is down. The S&P 500 is down. NASDAQ is up, blah, blah, blah. Bitcoin is down, right? A lot of times, a lot of investors are going to be like, you know what? I want to wait until until we have a red day. It's a bear market. The stock market begins to sell off 20-25%. That's when they want to buy in, right? But if you dollar cost average, guess what? It helps you be able to, just like when you your 401k. Here another example of time in the market beats time in the market. When I click on my 401k, it doesn't show. Man. I mean, it probably can just if I can do it the last 90 days, hopefully. So it doesn't show. Basically, your 401k your 401k is the best example of dollar cost average, because with the 401k you're able to uh when you every 2 weeks when the money is taken out from your check and to buy said whatever you are investing into your 401k, it's going to buy at certain price points. And so it's going to buy at this low price point, this high price point, this low price point, and then after 1 year, 2 years, 5 years, 10 years, everything be high, low, high, low, high, low. It begins to average. It begins to, and so your investment begins to grow, 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 grow. But the best way for me to go, I try to show you the NVIDIA, but also just quickly with the NVIDIA, I told everybody on Monday that Tuesday was the best time to buy NVIDIA. And guess what? Look, boom, up, up, up. Also, now remind you, I already had NVIDIA in my rollover IRA, but I started this new position in my Roth IRA because I want more growth. And you see right here, I acquired it on that Tuesday, and I kid you not, I thought perfect example of time in the market beats time in the market right here. What I mean by dollar cost average, right here. I bought in. I'm glad. Perfect. I knew it. So my old NVIDIA purchase, I wasn't able to show it, but this right here, NVIDIA split. It was at $122. But then that Tuesday, the market here went down. It was like bad news, and so it went down. I bought at $122. I bought right here. Here we go. I bought $121 at 121. 120.50 at 120.50. I bought $79. We were running 80 at 119.87. I bought at 118.97. $31 at 118.97. I bought $119 at 119. I bought $167 at 119.85. And so I was buying it at certain points. And this is why they say time in the market beats time in the market, because when you dollar cost average, as you see right here, I bought at 121, which is all the way up here, but I also bought it at 119.85 down here. I bought it at 119. I bought it right here at 120.98. So when you buy at certain points, dollar cost average, you add it all together, all the cost based up, you divide it. Here's where the math comes in. Average, boom. Now guess what? NVIDIA is at $132, and I'm up 9.6%. And I recently just bought this. Another example. An extreme example. I've already talked about NVIDIA. Broadcom. Ooh, this baby is a compounder. Now, mind you, in this example, it's to show do not let the high prices of stocks deter you from buying it. Meaning, here you go. I'm going to give you a couple examples. Microsoft is at $442. Broadcom is at $1,740. What else? Parker and Hannafin is at $500. My Costco right here is at $852. Again, I know a lot of people are going to say, Cadero, I don't have the full $800. I don't have a $1,740. You don't need the whole $1,740. All you need is $25, $100, $50. And then you just buy it every month. $50 every month. It adds up. It does. $100. If you was to put $100 in Broadcom every month, 100 times 12 is $1,200. You're almost there. You're almost there to have a full share. And guess what? Right here. And here is also example the drive the point home about time in the market beats time in the market. It's not about when you buy the stocks, when you buy all your favorite stocks, when you buy Microsoft, Apple, Amazon, Nvidia, the Fab Five, the Magnificent Seven, Tesla, whatever's your favorite stock. My favorite stocks is Broadcom, Microsoft. What else? My favorite stocks is I love Nvidia. I love semiconductor stocks like what else? I like Applied Materials. I love Apple and Microsoft because it pays a dividend, but also Google, which you see right here. I have 6 shares of Google. Begin to pay a dividend this year. I have Meta stock in my Roth IRA. Begin to pay a dividend this year. It's small, but it happens. It helps. But I wanted to show you real quick. Here's Broadcom. Broadcom is at $1,741.80. Here's why it's important that time in the market beats time in the market. I'm going to go 5 years back. 5 years back, I want to show you right here. I started my position in Broadcom back in October 5th, 2020. I bought right here. I bought 1 share of Broadcom at $365.73. Then I didn't buy anything else, right? But then right here, the next time I bought Broadcom was in 2021. I bought $485 worth of Broadcom. I bought another $472 worth of Broadcom. And guess what? I bought $679 of Broadcom right here. So before I go to right here, in the December 2021, I bought $723 worth of Broadcom, and I just want to show you that Broadcom has never been cheap, and so for the average investor, And right here, what you see is that I bought just basically I bought $4. So right here, this $4 right here, this $4 here, that's the dividend right here. I bought $200 at a cost basis of $520. I bought $100 here, $100 here, $100 here, and as you see, back then in 2022, Broadcom it was up and down because the market was down, blah blah blah. We just got out of COVID-19 in 2020. 2022 was a recession, and in that recession, everything was going down. Everything was going down, and with that, right here, I bought $100. So at 1 month, right here, in August, I bought $100 at $482. It jumped up to like $451. It jumped back down to $492. And guess what? I bought $100 more. I bought $100 more, and then I started this position here back in October 2020. The reason the important of time in the market beats time in out the market is because of this right here. 2020, the prices of Broadcom was roughly $300. Broadcom in 2020 was $300. Mind you, in early 2020, it was early $300. I bought it. I bought Broadcom towards the end of 2020. The beginning of 2020, that's the beginning of COVID. Around Marches, everything was down. So if you was able to get right here, if you was able to get it, you was able to got it on a serious discount. But hey, whatever. I got in at Broadcom at October of 2020. Now, mind you, if you or any regular investor was to look at Broadcom a couple months later, back in 2020, you look just like how I sold my United Healthcare UNH stocks, but I started a position in Broadcom that year, and I started a position at United Healthcare. And United Healthcare, I remember starting a position. It was at like roughly $325, $330. It went up to $350. I bought it, and then it skyrocketed, just like right here. So a lot of people, even back then, compared to the stocks that you may see, a lot of people wasn't trying to not spend $363 on one share. But guess what happens? If you'd have bought those shares, right, and this is why you invest for the future. You buy whatever you like, Apple, Microsoft, Broadcom, NVIDIA. You buy these stocks, and then you just look away. You just keep moving forward. You buy these stocks, and you move forward. And this is why. Because guess what? Let's fast forward. I bought the shares and right here in October. I nibbled some in 2021. I nibbled some in 2022. And guess what? How you know is because right here. Let me show you. Right here. It show you. I nibbled in 2022. I bought in March, May, June, July, August, September, and December. I nibbled right here. I nibbled some in March of 2023. And guess what? Look at the average cost basis. Now in 2023, I'm buying $679, $866, $871, $861. But guess what right here? Right here, I had a little extra money, so I dropped $650 in the market. Right here, I dropped $193. I dropped $879 for one share. Right here, I received a dividend. Right here, I was like, you know what? I want close to a share, right? Because I was like, you know what? And right here, I bought it at $916. Again, time in the market beats time in the market. If I was trying to time the market when I bought it right here, my thought process was, and I was mad. My thought process was, I was like, you know what? I bought close to one share at $916. Time in the market is me thinking, you know what? If I wait, it's going to drop down like it did in 2023, and I could be able to buy more Broadcom for $800, $850, maybe $700. But guess what though? Because of the AI boom, because of semiconductors, because technology is booming, Broadcom is doing acquisition and mergers. It's buying up. It just recently bought up VMware, and guess what? By trying to time the market, guess what? It went up. It didn't even go up to 1,000. It went up to 1,100. And then guess what? It went up from 1,100 to 1,300. So this is why the importance. I wanted to show you guys the example with the whole NVIDIA example, with the whole Costco, and even now with the Broadcom. You see these stocks and you think it's expensive, and you think, you know what? I'm just going to just wait it out. I'm just going to wait to a market crash. It's too expensive. And guess what? A lot of these low yielders, high price stocks like Costco, Microsoft, Apple, Broadcom, guess Lamb Research, these stocks that's doing 10-to-1 stock splits, Chipotle, guess what? These stocks and these companies are highly profitable. And so unless it's just like a market shaking event that what do they call it, a black swan event, that everything goes down like COVID, you know what I'm saying, or like a war, pretty much the stock market continues. When you zoom out, the stock market continues to move forward. And most importantly, right here, these stocks that are highly profitable, as you see right here as an example, it goes up. So you sit here stuck, right here. I bought it at May 22nd, 2023. I thought that it was going to continue to be at 679. I would love to have bought Broadcom more at 679, but guess what? Literally literally a month later, it's in the 800s. Not even the low 800s, 850, 871, 861, 879, 821. You think it's going to be in 800s again? Boom. It's in the 900. Boom. It's in 1100. Boom. 1300. And now guess what? Look at Broadcom now. As of today, it's at $1,740. Boom. It was roughly at 14. It was roughly at $1,400. Now it's at $1,700 in a matter of a day. You see why time in the market is so scary? Time in the market is better just to dollar cost average every 2 weeks, every month, whatever your budget, and just, if you like the stock and you have a high conviction, you might as well pull the trigger. Last thing I wanted to just show you guys here. This one last thing, and I know this, I want to make the video any last longer, but right here, I'm gonna do 3 years. Last example. This is why time in the market beats time in the market. Listen, 3 years ago, right around this time, my portfolio was at $26,245. I know people with portfolios a lot larger than mine. I'm just being a good steward. I'm just being consistent and disciplined, and I'm just putting money in my portfolio as I go to grow this portfolio. So my first goal for this portfolio is to be 100K. Then past that, then we move forward. But 3 years ago, as you see right here, $26,000. And guess what? I felt discouraged. I was like, man, I don't see any gains. And guess what? When the market right here in 2020, when we right here, it was at 34,000, and then it dipped all the way to 31. Just like you, I was like, you know what? I was like, I don't see any progress. And typically, again, time in the market beats time in the market. A lot of people, when they see the dips and when the stock market drop down, what they tend to do is they don't keep their money into the stock market. They take it out. And guess what? It was flat right here. It dropped in June. It was flat June, July. And guess what? It shot up in August. It shot up from 33,000 to 37,000. Because what happens is that when the stock market goes down, a lot of people think that, oh, I lost my money. For me, as a long-term experienced investor, when it's a red day, when the stock market, when there's a crash, I see it's on sale. When I see the stock market go down, I think, you know what? when you buy your favorite game or your favorite food, and you say, you know what? Oh my God, this video game is normally $60, but now it's at $40. That's how I see stocks, especially my favorite stocks, especially like Microsoft. Microsoft was at roughly for a while $425, and then we had federal power, Chairman Powell would say something, shake the market, and then guess what? Everything will go down. Especially Microsoft, strong company, strong balance sheet, will go down to what 405. 395. It once had touched around 385 ish, and guess what? I began to pick up shares, and then it began to creep right back to 400. It creeped right back to around four, and guess what now? Guess how much Microsoft is right now? Guess how much it is? I'm gonna show you. Microsoft right here now is at $442. And if you don't believe me, let me show you real quick. I'm gonna show you real quick right here. Boom. Right here. January 2024. I was buying it at 390. Let's go beforehand right here. December of 2023. I was buying Microsoft at 370s. 370, 371, 377, 370, 375, 371. And then it started to go up. And I was like, do I want to continue to buy? And I began to nibble a little bit more. I bought it at 390, 404, 411, 418, and the most recent one. The market got scared about something. I think it was the CPI data and whatnot. And then the market went down in April, and my net worth went down. And guess what? It went down. It went down from 418 right here back to $401. It actually went down lower than that, but I didn't have enough money to buy in at that time, so I bought in at $401, and then right here is my recent dividend that I just received. And so all in all, just wanted to explain to you guys, don't let these high prices of these stocks deter you from buying and getting in a great dividend growth company like Costco, Broadcom, Parker Hannifin, S&P Global. These stock, United Healthcare, Domino's Pizza. These stocks cost $500, $600, $800. If you don't have the full amount to buy the whole share, just dollar cost average. And then with your dividend growth portfolios or your investment portfolios, invest and just ride it out. Rather the stock market go up and down. If the stock market go down, if you got the money, buy more. If you don't, just let it ride. And then when the stock market goes up, still buy more, but just buy a little bit. Just nibble. Like I said, just nibble. You don't gotta buy a lot. Just nibble along the way up to the top, and then when it goes down, that's when you buy a lot more. So hopefully you guys really learned something and really appreciate me showing you guys this, because I wanted to show you guys, like, man, I saw that NVIDIA did a stock split. Broadcom plan on doing a stock split, and I really just had this video on my heart, and I just really just like, I want to share this with my subscribers and share this with new investors, and even just all investors are like, man, I know because a lot of people making videos. Should I buy NVIDIA right now? Should I buy Broadcom before the stock split? And I just wanted to show you that it's best to not wait. I could clearly just show you that I was buying Broadcom back when it was at $365 5 years. Well, yeah, almost close to 5 years ago, 4 years ago, 5 years ago. And guess what? I bought them at $365, and Broadcom is at $1,700 today. Keep that in mind. Always buy your stocks and then just wait on it. And if it's a good company, it's gonna make profit, and it's gonna make you profit. So hopefully you guys enjoyed my video. Like and subscribe to my channel, Millennial Investor 1914. Out. Peace.